The Morning Drive is sponsored by Power Metallic. To find out more about the company, please visit their website at powermetallic.com. Follow the Money Investor Group is a 100% Indigenous-owned company and certified with the Canadian Council for Aboriginal Business.
Ryan King, Carl Boyd, Bobby Boyd, the next Eric Sprotz in the background. Hopefully she doesn't say anything, but if she does, that's cool. So that's my daughter in the back that nobody can see, Ryan King, VP of Equinox Gold. And well, there is lots to talk about here, so we'll just get her going. But okay, so it's not a secret now, Equinox and Caliber merged to join Equinox 2.0, to make Equinox 2.0. I guess we can give a little bit of a background on how that happened and why it happened.
Yeah, sure. So actually, the deal closed in June. The announcement of the consummation was in February. Actually, we did this, so it came together during the Bank of Montreal's Metals and Mining Conference, which is a pretty significant event. And look, you know, it was like-minded, well-known mining entrepreneurs out of Vancouver. Ross Beaty, who is the chairman and founder of Equinox Gold, Blaine Johnson and Doug Forrester, founders of Caliber Mining. Of course, they've known each other for many, many years. They've not done any business together in the past. And they looked at each other's asset portfolio, as well as cultures, as well as the overall market. And we all really believed that bringing the companies together would unlock a lot more value than if we were to keep the companies together. It would give us better access to capital. It would give us broader access to the capital markets. And it was an interesting point in time because both companies were ramping up and birthing new major Canadian assets. So we were both in the process of enhancing our portfolios via these builds. And we had been investing significant amounts of capital, an intensive period of capital investment into these new Canadian mines for a period of time. And they were both coming kind of to fruition at the same or a similar timeline. So it would unlock the company to become the second largest gold producer with Canadian assets, from these Canadian assets. So it was really those the mining entrepreneur guys coming together and saying, we've got this product with you guys. We believe that it can be a superior product, and it evolved to over time coming to an agreement and then launching this deal, which we can get into this, but first blush of reviews upon the announcement weren't overly positive. Some were against it, some were for it, some liked it, some didn't, but it led to a small bump in value for Caliber shareholders because there was quite a bit of pushback.
Yeah. Well, I mean, and you know what? I think there's been lots of chatter about that. To be honest with you, I think people have looked at that discussion now, but we've got this surge in the gold price, right? And I get a lot of people in this chair. Usually one of the questions I get out of the way is, okay, so you're here, you're kind of a spokesperson for the company, you're sort of biased, right? But I've done some research here, and you've got like 70+% of your net worth in this thing. So I mean, yeah, you're paid from the company, but at the end of the day, the share price is going to either decrease or increase your net worth, which is the most important thing.
Yeah. Yeah, well, it's a good point you bring up, actually, because if you look at Ross, a significant number of shares that he owns, I think it's over 25 million shares in Equinox. Doug Forrester, Blaine Johnson, and a number of the the senior leadership team are significant shareholders in the business, and I think that's important. It's very aligned with shareholders, because what do we want? We want to see share price appreciation through the exploitation of gold exploration, development, and production. Ross is a visionary. He's always believed that, given the macroeconomic landscape, we would see higher gold prices over time. And of course, he's been he's so well known in this overall mining sector because of, as a professional geologist, he's been very, very successful finding, delineating, selling a number of assets around the world: copper, silver. Of course, built and founded Pan American Silver. And
14 10 acres.
Yeah, as pretty significant. Somebody who's been there, done that, knows what he's doing.
Yeah.
And again, his vision was to build a multi-asset gold producer, a diversified portfolio with 1 million ounces a year of production. And so we're now at this point in time where that portfolio has been assembled, and with the Caliber merger, and with the recent management change, we've got a gentleman leading the company now, Darren Hall, who has tremendous amount of experience and expertise in delivering assets, delivering quality, but a very disciplined approach to delivery. And I think that has been an opportunity here.
I mean, I'm not a spokesperson for the company, but I do like people that get in the seat here that are very selfish. I think it's a great time to be selfish. You've got a big part of your net worth in something, so you're talking about it, but hey, you're biased. You've got Ross, who's been in the seat before, who is quantity, right? Million ounces, and then you've got the new CEO who's quality. How does that work out in a boardroom?
Good question.
Right, and I mean, Ross doesn't. I don't know him that well, so I shouldn't be saying this, but just based on how people talk about him, I don't think he's got the biggest ego, right? I think that's something that or if he does have an ego, he knows how to maybe remove it when he needs to, and I think that would have had to have been something here, right? Yeah,
I guess to some degree, but large shareholders and visionaries like Ross have an opinion, and they work as closely as they can with their management teams to unlock value. And if we look at just the last couple of months, and to your point, we've seen a nice gold price appreciation, so it's done very well in a short period of time. But with Darren as the CEO, he's brought a new level of kind of resurgence to focus and structure, and focus on delivering into the expectations that we as management and board set. So we have to be very aware of the expectations that we set, such that we can deliver into them. And yes, Ross and Darren and the team have had lots of discussions about this, but inevitably, or in the end, what does Ross want? Ross, in my opinion at least, wants to have a quality, valuable, reliable a product that the market is confident in. And he's had this concept to get here, and we're here now. We have the portfolio, and I think that he can stand tall and say, look, this is the whole vision all along, was to build up this portfolio, and now we have the portfolio and the team to unlock it. And so I think he puts a lot of, although it's an early relationship, I think he puts a lot of trust in Darren and what his abilities are in order to deliver into these expectations. It's not easy to have to reset expectations and then go through that process. It's tough, but again, we just want to start creating and building confidence that that this is a product and a go-to name in the gold sector.
Okay, so very important. I know it was already in our disclaimer, but I'm going to bring up two things here. One, this is a paid interview by Equinox Gold. They paid me to talk about Equinox Gold, but I'm going to let Ryan do most of that. Now, I also don't give it financial advice. However, I did have a friend call me. His name's Jeff Lee from Complete Contracting. Shout out to him. And he said, oh, Carl, the gold price is really ripping, any stocks? And I said, hey, I can't give financial advice. However, I'm doing an interview with a gentleman named Ryan King. You should check it out. Take a look at Equinox Gold, do your own due diligence. Now, if I'm someone like Jeff, who's looking at making an investment today, so they're not a shareholder, what should they be focusing on? We talked about the merger. Somebody would see that in the last few news releases, but what's the upside today other than, if you want to talk macros, go for it. But if you want to just talk about the assets that Equinox has,
sure.
Let's do that for the Jeff Lees of the world.
Sure, yeah. For the Jeff Lees of the world, hi Jeff. Hopefully you've got a little bit of experience looking at this sector. I mean, I find you want to do a bit of reading broadly on the overall gold sector, gold miners, gold explorers. Get a little bit of a base knowledge, I think, is critically important. And then for anyone looking at the sector, they're going to be looking at explorers in some cases, higher risk, potentially higher reward investment classes. You're going to be looking at developers. Developers, a company that is found a deposit and maybe advancing that deposit through all of the economic studies, the permitting, etc., to get it into a position such that it can have a next phase investment decision of construction, right? And then there's producers like Equinox. Equinox has been building up that portfolio and production portfolio for a number of years. And we're in this position now where we're unlocking a tremendous amount of value. There's something called the Lassonde curve that I would encourage Jeff to look into. The Lassonde curve talks about when a company discovers a deposit, you can have a real uptrend in the value of the equity. When the company gets through a construction phase and transitions into production, so generating cash flow, you can see a pretty significant uptrend. And we're kind of in the post-construction uptrend in terms of the Canadian assets. So this has gone from, again, Greenstone in Northern Ontario investing hundreds of millions of dollars into infrastructure, into equipment, etc., and now at a position where you're starting to realize the value of cash flow from that asset. So it's just in the ramp-up process. So and I think one more thing to add there to that is that investors should be looking at a diversified portfolio, but also assets in tier 1 jurisdictions. And this is important from a geopolitical perspective, a lot of different reasons, but you want to invest in where you're comfortable going, where you're comfortable investing. And, Canada is a tier 1 mining jurisdiction. Australia, another, and the United States, I would say the same. Equally at the same time, we've been constructing, and we've just finished construction of the Valentine gold mine located in the central region of Newfoundland. So again, that's kind of the beauty of bringing Caliber together with Equinox, because you had two cornerstone assets at the beginning of their life that is going to be around for decades. There's very likely lots of exploration upside, but they're both going from a capital intensive period and in this inflection point as we're speaking to generating significant amounts of cash flow. And excitingly, we're doing it at all-time highs. So it's not just that the gold price has run up, it's that Equinox, the business, is birthing new assets to generate more cash flow per share for all of our shareholders. So we've got those things going on within the company. At the same time, we've got more mature assets in Central America, in the United States, in South America, and others in North America that we're going through the exploration and development phase as well. So we've got some growth in the portfolio in the near term. When I say near term, I talk about the next couple of years.
Yeah.
So for example, we've got an asset in California. We have a mine that's been operating there for many years. It's called Mesquite. It produces about 80 to 90,000 ounces a year. But at the same time, we've got a development stage asset. So again, we're not just producing gold, we're also always reinvesting into the portfolio to have a sustainable business. And one of these assets called Castle Mountain, we're working through the permitting process now. In fact, with that one, you probably recently read, or investors may have read in the media, where President Trump has signed an executive order to fast track critical minerals in the United States.
Sorry, skipping tracks is not possible for the current series. You have not subscribed to this function. Please check your set.
Wait, we did subscribe to that function. No,
They
so
didn't like Trump.
he didn't like that. Yeah, there you go. Nice one. He didn't like the fact that there's fast tracking of critical minerals in the United States.
What's going on here?
So what's happening? But to continue down that path, is gold now falls into critical minerals category,
yeah.
which puts Castle Mountain, which is a multi-million ounce development stage asset that's gone through feasibility study, on a path to, as we've been told, to expect a record of decision by December of next year, which we would anticipate then potentially, if that goes ahead as a positive record of decision, we would then expect potentially state permits within the next 3 or 6 months after that, and putting the company in a position to make an investment decision on construction, going ahead with that, which all aspects of the asset look pretty productive and economic at these levels. So this could lead to an asset in North America that will be producing another 200 to 250,000 ounces a year of production. So that's another reason why you want to look at a company, and this could be self-funded through the cash flow that we're already generating across all the other assets.
I mean, if you don't know the answer to this question, I'm not going to, I apologize. But for every $100 increase in the gold spot price, how does that hit profits when you look at CapEx, exploration, all the way down to the toilet paper?
Sure.
And if you don't know that number, this is a new thing right now, so I don't blame you. But
let's just kind of go into forward-looking statements now.
Sure.
And say, using this year, for example, we're going to produce 785,000 ounces on the low end to 915,000 ounces on the high end. Call it the midpoint, 850,000 ounces. Now that does not include the new Valentine gold mine that has just had first gold going through the plant. And so if you think of Valentine's an asset, as I said, in central region of Newfoundland, that would produce somewhere between 175 and 200,000 ounces of gold a year. So
is that the one that you guys got from Marathon in Caliber?
Correct.
Okay.
Caliber Mining acquired that from Marathon Gold, closed that deal in the beginning of 2024 and finished the construction, and now we're off to production of that asset. So we're ramping that asset up. Now, if we used the numbers I was just saying on an annualized basis, you're adding that to that 850. So let's take a step back and say, okay, going into 2026, let's assume we do, for simplistic purposes, and this is not guidance, but this is, if we were to include the Valentine into our production profile that's similar in 2025, giving us a number of around 1 million ounces of gold production.
Right.
Again, let's take a stab and say, I think this year our all-in sustaining cost was $1,800 to $1,900. Let's use $2,000 an ounce.
Sure.
And there's a number of other things. For example, we'll probably spend somewhere between $100 an ounce, close to $100 an ounce on exploration.
Yeah.
Right. So $100 million on exploration. We've got some finance expenses. We've got a few other things. Let's call it $2,500, all in.
Yeah,
all in.
Yeah, that's a big number.
We've got this term in the industry that's called all-in sustaining cost. That's got a definition by the World Gold Council. But then I'm saying the all-in cost. Now, let's say gold is $3,500 an ounce. Right now it's $4,000 an ounce. But let's say gold is $3,500. Just again to put another level of conservatism into this. We are generating, again, 1 million ounces at $2,500, about $1 billion of pre-tax operating cash flow. So another $100 on the ounce, another $100 onto that. Again, not looking into the tax brackets or anything like that, but a pre-tax operating cash flow, you're about $1.1 billion.
So you talk about leverage.
On an annual basis right now.
Yeah.
I believe, and this is because, and for a balanced discussion, we have $1.7 billion of debt. We were net debt $1.3 billion at the end of Q2. We've taken on debt to build these new high quality, high margin assets in Canada. So you look at that number and you say, okay, these guys could generate $1 billion a year at these gold prices, in this gold price environment.
And you're at you're around a $12 billion market cap.
Around that Canadian. I'm talking US dollars in terms of that. So we're around 8 billion US.
Right.
And so I believe that we could reduce that all-in cost, because probably $200 per ounce is in our finance expense line item on the income statement. So you're talking about potentially paying that down within 12, 18 months, reducing your all-in cost by 200 on the back of that, because you're going to delever your balance sheet as rapidly as possible. So then we've got better margins looking forward.
Yeah, much better.
Significantly better, cleaning up the balance sheet, and that's really the focus of the company now, because I think that it's probably holding us back from seeing a little bit more share price appreciation. Is the debt.
Right.
Is the debt. So we'll clean that up, because it's the environment where we can do that now with this gold price, and also the delivery of these ounces in this portfolio, as Ross's vision was to get to 1 million ounces.
Yeah.
But that's not necessarily super critical for our business. We want to be sustainable in any gold price environment. This business is going to be around for a while.
Yeah.
And so, we're always looking at things. So I'll give you an example. We just divested of some smaller assets in the portfolio, and they were located in Nevada. 35,000 ounce a year production profile. So a little bit smaller for us now. It's we want to look for larger, big, 200 to 250,000 ounce a year production centers. So we will continue to look at the portfolio, and there are other opportunities to potentially divest other assets. But we really want to spend some time understanding it and looking at the pros and cons of doing that. But let's see how things unfold, and there could be some other opportunities to do that, which again, might lower the production profile a little bit, but it might also enhance the margins, because some assets in the portfolio, being more mature, might have higher costs or lower mine life. So we're always looking at ways to improve and enhance, such that whatever we do will hopefully lead to share price appreciation. That is really the company's focus, is share price appreciation through the exploitation of gold. And we've had a nice run here over the last 90 days. Now gold price is up, but I'll give you a stat which is actually kind of interesting. If we look back now, since 2022, and I use 2022 because 2022 is a year when really things kind of changed for gold. And the reason they changed was because the United States sanctioned treasuries in a Russian central bank. Now, every other bank in the world is sitting back going, "Oh, what if they did that to me?" So that all of a sudden spurred a significant amount of new investment into gold, which is a neutral asset, and divesting of some U.S. currencies. So it was an interesting time. But using 2022, when this all started, I go back to that date and time, and I look through probably year to date, a week or 10 days ago, and most companies in our peer group producing 500,000 to 2 million ounces of gold a year are up an average, I think an average of about 200 to 250%.
Since when?
2022.
Yeah.
Right? Now, Equinox Gold is up 70%. At this point in time, when I was doing this analysis, the gold price was up 110%. So now, normally, you would buy a gold producing equity to get better leverage to gold.
You want leverage, yeah.
And we're underperforming gold at this point in time. So I still believe that there's upside opportunity on the equity as we delever and as we execute on our plan to deliver the ounces that we said we were going to do.
Well, I mean, that's interesting, because one of the most polarizing things I remember when Ross was in that seat, and he was talking about, you buy, I'm pretty sure, don't quote me, but I'm pretty sure he said you buy Equinox for leverage.
Sure.
Right?
Sure.
So, and the thing is, the market already knows. This is an open discussion that Equinox wasn't delivering on certain things. And that's what makes, the whole merger kind of really fun to look at.
Yeah,
right?
absolutely. Now is a fresh beginning, a new start with tiered up assets.
Yeah.
And I believe that this is just in the beginning of turning this into a very high quality, let's call it, I mean, we're, if I compare us against an Alamos Gold or an Agnico Eagle, which are big names in the sector.
Yeah.
These are top value quartile gold equities that people go to.
Yeah.
Generalists, precious metals funds, everyone.
Sure.
And I think we're at the precipice of people starting to look at Equinox now, because we've got 65% of our NAV now coming out of Canada. Similarly to Alamos and Agnico, where they've got that high or higher percentage coming out of Canada.
Yeah.
So with that tiering up, and then there's a number of key metrics that we look at, longevity of asset, jurisdiction, margin, and returning capital to shareholders, right? So they're both returning capital to shareholders, and we're focused on delivering and delevering the balance sheet. Well, very soon, I would imagine that, it could be 12, 18, 24 months where we're in a position to return capital to shareholders. And I think that really changes the dynamics of the value of this equity.
Yeah, you think there'd probably be a re-rate?
I believe we're in that process now, and yes, of course, we've seen a nice bump in share price over the last little while. We're probably the best performing gold stock in the last 90 days.
Yeah.
But at the same time, when you pull it back and look at the bigger picture from a longer term perspective, it's like, whoa, they're just beginning here, and based on the stats, there's a lot of room to run.
Usually I'm at the gym back in Toronto around 9:45. I'm in the gym, and I always see this notification pop up from investing.com. Equinox Gold hits new 52-week high. Like, honestly, okay, so anything else on the Equinox side that you would like the Jeff Lees of the world to see about Equinox, or do you want to switch over to macros? Because I like to dance with you a bit there.
The only thing that I would also add is, as a company, we're always investing into we have to be investing into the assets. And from an investor perspective, which I find very interesting, and because I've seen in my career, the highest return on investment hasn't been the gold price going up. It hasn't been, delivering the production. It has been finding new, right? As I said at the beginning on that Lassonde curve.
Yeah.
Right? Finding new at an existing asset can have tremendous value for shareholders.
Yeah.
Even for a company of our size now. And that's why, as Darren will consistently say, we will always invest. We're an exploration company backed by Equinox now today.
Yeah, sure.
We're
okay,
an exploration company that is backed by over $3 billion of annual revenue. Right? We're doing that because when we discover new or we expand resources, that's going to create additional share price performance. So we're investing, call it $70 to $100 million a year, drilling new targets at our existing assets to see if there's additional mine life we can put, or maybe there's a change to the milling and processing, how you do it, because you found something new. That's where a great amount of value can be created.
So would Equinox invest money and partner up with other exploration companies? Or is it just something you want to do on your own?
This is something that we will do with our capital into our assets.
Got it.
Right?
Okay, yeah, you're looking
at this point in time. Correct.
Blue sky potential on your own assets.
Exactly, and particularly, if not all of them, it's particularly focused on the assets that haven't had a lot of exploration, like Valentine in Newfoundland, or at Greenstone, where there's tremendous upside. There's 7 past producing underground mines there that have not had a lot of modern exploration. So I think that's an important aspect because there's companies out there that discover, and then you delineate it and you've got this deposit, but quite often there's a lot of other potential on those assets. That's how the saying goes. When the best place to find more gold is at a gold mine.
Yeah.
Right? So we'll see.
Okay, so let's get away from Equinox now, and we're going to be selfish and talk about Ryan King's.
Sure.
Look, obviously you're 70% leveraged to Equinox.
Maybe more.
Okay. But that is then leveraged back to gold. So let's talk macros. Like,
Sure.
Ryan King sitting at home, hanging out, or listening to some podcasts, or looking at central bank buying. Like, what do you think about the price of gold? Like, if we're playing baseball, which is my favorite sport,
Sure.
Go Jays.
Go Jays.
Go Jays or go Mariners?
Well,
just check.
Well, I say go Jays. I mean, obviously Canadian, right?
Okay.
I mean, those people down there. It's Seattle, it's not Canada.
Right.
But let's see. I mean, we're still waiting on the Mariners' outcome, right?
That's going to be decided tonight.
It is.
So you're probably maybe hoping the Mariners win because
they
can sneak over for a game.
That would be nice. That would be fantastic. We'd probably try to do that.
Okay.
We'll see.
What inning are we at in a bull run for gold? Like, again, this is just Ryan King, not Equinox right now.
Yeah.
What does Ryan King think? What inning are we in? Second, third, fifth? And then why?
Yeah, that's a great question. And Yeah, from time to time, people ask us this.
And you're not an economics major.
No,
But
I'm
still,
not an economics major. I've read some books, I've studied some things, I've listened to some people, I've listened to some podcasts. So I'll typically tend to try to gravitate to those that have got years and years of experience and been through multiple cycles, et cetera, and listen to those that study this. And I would say it's less about an inning, because this is going to continue. We are going to continue to see a debasement of fiat currencies over and over again, and history tells us that.
Well, I'm going to pause you. Like, I was looking at some stuff yesterday, and I know it's BS, because if you look at the Canadian Bank of Canada's inflation calculator, but here's some facts. They're facts. I don't think it's reality, but 1971 gold price in May was $40 an ounce.
Yeah.
Right?
Okay.
Now we know where it is today, somewhere around 4,000 US. So
Yep.
Canadian, you have to do the conversion.
Yeah.
But we got to be somewhere around 6,056, 6,000 Canadian.
Yep. Yep.
So that is so the gold price has more than 9,000. I think it's not over 9,000% increase.
Yeah.
And dollar debasement. So the Canadian dollar your purchasing power has gone down 677%.
There you go.
677%.
I'm glad you stopped me, because that's exactly right.
I was looking at it, man.
Yeah.
So it's right there at the tip of my tongue.
Yeah.
Anyways, you go ahead. It's your
No,
interview.
I mean, you just followed up with some good stats and information as to why we're probably in an environment unless or until currencies and governments start backing their own treasury or their own currency with gold. I don't know that there's a situation, and there's been talk of the renminbi doing that, looking at doing that, or the BRICS nations looking at a new medium of exchange, a new currency that would be backed by gold. There's lots of chat about that. But look, I think that this will continue, and it's been exasperated over the last few decades, right? As significant amounts of quantitative easing and injections of capital into the system that has not caught up to hard assets, particularly gold. So I think, I saw something the other day that Pierre Lassonde was saying, look, with the M2 money supply, we're looking at a $17,000 to $20,000 per ounce gold price environment.
How much?
$17,000 to $20,000 per ounce in US dollars.
He wouldn't give a timeline though, right?
No. So 1971 gold was what did you say it was?
$40 an ounce.
Okay, and here we are. What are we? That's 55 years later, and gold is $4,000+ an ounce. So, and I actually read a stat that said gold has been the best performing asset class for the last 20, 30 years. So, yes, it might go through ups and downs, and it's very cyclical, etc. But it's been over time one of the best performing asset classes that we have to look at. And now, I think that we're in an environment where things are really shifting. If you think about Ray Dalio and some of the history reviews that he's done and studying he's done, it is right at the precipice of time where he talks about these big cycles, and maybe you're seeing a major world power shifting happening, and therefore reserve currencies shifting. And I think that there's not a lot of other products out there. I think gold is the second reserve world currency now.
Well, whatever happened to the whole Trump wanting to see what's in Fort Knox? What came of that?
That's a great question.
Like, it just went away, man.
It just disappeared. Yeah, it shut it up. Somebody shut it up real quick.
Someone did. Anyways.
But it's interesting that,
if it's going to happen, it would probably happen during the Trump admin, you'd think.
100%.
He's the only one that's got the
100%.
kahunas to make that happen.
Absolutely. And there's been talk about if they revalued, their central bank revalued the gold that they have, quote unquote, in Fort Knox. Well, what would it be valued at? $15,000 an ounce. It would be revalued there, and then they'd be out of debt, or out of that difficult environment that they put themselves in.
Yeah.
But countries, and it's no different. Like, as soon as it's a behavioral thing. Like, once we have a great economy, you don't want to lose a great economy. So you're going to do everything you can to stimulate the economy in order to continue it on. But that means that you are going to take on more debt. That means you're going to provide incentives to keep people spending, and et cetera.
I agree. And I was just talking to someone who's a mentor of mine the other day, actually, and we were talking about crypto and Bitcoin, and he bought a Bitcoin and then got out of it. And I was like, what do you think of that? He's like, Carl, you know what? The system that we're on right now is not going anywhere, because that's how emperors have always ruled.
Yeah.
They've always ruled by devaluing dollars and keeping the shenanigans going.
Yeah.
Which is fantastic for gold.
It's fantastic for gold.
So
Yeah.
you probably would
So if we go
agree?
back to the inning assessment, I would say that I still think in our lifetimes, you and I will see higher gold prices.
Yeah.
We're likely, depending on how long we live, let's say the average lifespan, we're likely to see $10,000 per ounce gold.
Yeah. Well, I hope. I hope that comes a lot sooner.
Yeah, but who knows what happens with governments and products and Bitcoin.
Yeah.
Bitcoin as an example.
Yeah.
Look at how much money has been taken out of the system
because of it.
to invest in these cryptocurrencies that were just created.
Yeah, that probably would have went to gold.
I would think so, because again, this is a digital gold, right?
Yeah, that's more of
Bitcoin.
a cultural thing, right? Bitcoin. Like, what is Bitcoin? Well, that's a whole nother
Well,
drive.
it's a story that's been created.
I know you're getting a little anxious back there.
Somebody's
aren't you?
getting hungry back there.
You've been doing very good, buddy.
Fantastic. She's just still sitting back
You're
there.
hungry? Okay. We're gonna wrap it up with mine. It's been like 34 minutes. Good job.
We had a great interview.
Okay. So give me like 5 minutes, okay?
What do you feel like? You want to eat some pizza maybe? It's lunchtime.
Oh, pizza, yeah.
There you
We'll go
go.
to the Village Pub in West Vancouver. How about
Whoa.
that? My favorite
Nice.
pizza pub. Okay. All right, Ryan. So we're going to wrap it up, and you've done a great job with Equinox Gold, obviously, explaining the potential value prop to the Jeff Lees of the world.
Yep.
Jeff, you're going to have to pay me, man. You're getting a lot of shout-outs.
You get a lot of shout-outs, Jeff.
And we're
Well
going to do
done.
an X Space.
Nice.
We're
Yeah.
going to do that.
Beautiful.
So hopefully you enjoy. That's super easy. You can do it. It's just audio only.
Yep.
You can do it from your bathtub.
Perfect.
I'm not saying you should.
Yeah,
but
you can do
could.
it from wherever.
Yeah. You
Hey.
could.
Can we do
And,
it from a plane?
I don't know.
Probably
You have to have a good Wi-Fi.
Right. Yeah, yeah.
Can you do me a favor and say hi to Rylan for me?
Do you want me to say hi to
Yeah,
Rylan?
just say hi. Yeah.
Hey, Rylan.
Yeah. Well, no, when you get back to the office.
Okay, yeah,
'Cause
I see what you're saying.
Yeah, we do.
Rylan is a vice president of investor relations for Equinox Gold, and she's been around a long time in the industry, but also she's been part of the founding team
Yes.
of Equinox.
Yeah, and she's a treat to work with, at least for me. Yeah.
Excellent.
All right, so wrap it up. We'll get back to the office.
Appreciate that, and thanks for taking the time. And hopefully your audience finds this to be informative. And of course, if anybody has any questions, they can reach out to us directly. You can find my contact details on the website, equinoxgold.com. But I would also say that, and I think that just to be prudent, the gold price has run up a lot recently.
Yeah.
And I have no idea. I don't have a crystal ball of where it's going. But is there a chance of a pullback? I think it's reasonable to think that there's a chance for a pullback in gold. But at the same time, the macro landscape isn't changing. I mean, yes, recently we've had, thank goodness, some peace in the Middle East, and we're still going through the shutdown in the United States government. So let's see what happens. But I think it would be a prudent thing to have a pullback in gold. And I don't know what the time frame would be, or I don't even know if that could happen or will happen.
Yeah.
But one thing is for sure, and you said it, it's the central banks are continuously buying. And somebody told me today, price is not an issue. It is not a matter of
Yeah, they're not
issue
looking
with
at
the
that.
price. They're looking at, oh my gosh, I have this U.S. currency, and I don't like the future of that. I like the future of this neutral asset class gold.
Yeah.
So we'll see how it all goes. But important to note that, of course, yes, we've got 100% exposure to gold, but it's all about us delivering into the expectations, delivering the ounces to realize that value, to realize that revenue, and hopefully start to build significant confidence in the market that they can go, hey, this is a product that we want to invest in any gold price environment cycle.
Take care, Ryan.
Thank you. You too. Appreciate it.